Today we're going to talk about one of the most frequently asked questions I get, and that is, how does a stop order work? How can I use a stop order? How far behind the price do I put the stop order? And we're going to have a discussion about some of those things. As you might know already, there's no fixed answer that covers all scenarios, so you kind of have to wing and adapt on the fly. But I'm going to give you some ideas today as we talk about that. There's nothing more frustrating than having a $50, $7,500 profit in a trade and then either letting it all slide back into the market or even turn into a loss. It's very frustrating, but sometimes it happens. It happens to me, it'll happen to you, it happens to all traders. Sometimes when you think a trade's going bad and you stop out, whether it's with a stop order or whether you're doing it manually, then the market will turn around and you miss some money that you could have made. But that's just part of trading, and it's going to happen to you. But still, using a stop order, there are some better ways to use it than some less better ways, and we'll be talking about that today. We'll talk about the kinds of stop orders in a moment, but first you should know there's such a thing as a mental stop. You don't actually enter a stop order, and we're going to talk today in this video about how to do that. You don't actually enter an order in your computer and let it stay active while the trade is working, but you prefer to keep it in your head. Now, sometimes experienced traders will use more mental stops than hard stops because they've learned over time with experience to have enough discipline to be able to react during a trade and make a better decision than they can. Instead of putting in a hard stop and then having to change it a few times during the trade. It's just a personal preference, and whichever way you try it, you might want to try it both ways if you're new and see which one works better for you. I can't say because I don't know your psychological makeup, how much experience you have, your account size, or your risk tolerance. Okay, standard chart here, NASDAQ100 Micro Emini candlesticks, 5-minute increments, and the MACD in the lower pane here. I'm going to illustrate with this same chart here to eliminate confusion if I show you 3 different ways to use a stop, but I'm going to use the same chart, and that way you can keep your focus on the orders rather than how the chart's manipulated here. You see, we have about 8:45 in the morning, we have a buy signal. The green line is above the red line, and both those lines are above the MACD 0 reference line. So we get a buy signal right here at about 8,200. Now we can see, remember, the width of each candlestick is 5 minutes, of course. So 5 minutes after we enter the trade and 10 minutes after the trade, we're already up to 82.50 at $2 a point. That's about $100. So that's a good trade already. Now, we have $100. It's unrealized profits so far. So we're going to use a stop order to make sure we don't give it all back. So we have a $100 unrealized profit. We enter a stop market order at 8,225. Now what happens? Should the market trade back down to 82.25? It triggers a market order and you get the next available price, which means you would be out with approximately a $50 profit, give or take 1 or 2 little ticks. Now I'm going to change one word here. Instead of a stop market order at 82.25, I'm going to put in a stop limit order at 82.25. Now, a stop limit order works slightly differently. If the market hits 82.25, your order becomes a limit order to sell the contract at 82.25 or better. Now I'm going to show you another type of order called a bracketed order, or an OCO, for one cancels the other. It's where you put in 2 orders at the same time, and if either one is executed, the other order is canceled, or one cancels the other, OCO, or a bracketed order. Now what happens with this? We're in the trade, long run contract, 8,200. 10 minutes later, we're up 50 points, or a $100 yet unrealized profit. We decide to put in a bracketed order. On the top bracket, we're going to have a stop limit order at 8,300. In other words, it will automatically execute a market order to sell the contract once it's triggered at 8,300. On the lower side, or the bottom bracket, we'll put in a stop market order at 82.25. This means if 82.25 is triggered, we get the next available price and we're out of a trade. Now, when either the upper or lower bracket is executed, the other order is automatically canceled and you're out of the trade completely clean. And you either make $50 or you make $200, depending on whether the upper or lower bracketed order, also known as OCO, one cancels the other, has been executed. Another question I get a lot is, well, what if I have other things to do or I can't sit and watch the screen? I don't really have to put in a stop order if I'm going to be away from the screen, do I? Yes, you do. I would highly recommend it. I have seen in the middle of the day someone drops a bomb on an oil field and the market can go up and down several hundred points almost, well, really without notice, and it can do it in 3 or 4 minutes. So I would never do it. I would never leave a trade unattended without some type of stop order in, whether it locks in a profit or whether it limits the amount you can lose on the trade. Now, I use Tastyworks here, and I recommend it to a lot of people who ask me about brokers, and I'd like to show you why. Here's a bracketed order box at Tastyworks, and you can see in this particular example here, I was short one contract at 8092 1/4, and in the stop loss box up top, it tells me I would have an estimated loss of $35.50 if I had a stop at 81.10. And then in the bottom half, it says close at a profit. It tells me I would make a profit of $84.50 if I put a close limit price at 8050. It's very clear, and it's a good entry, even does the math for you there. And that's Tastyworks. And don't forget, there's a link for more information on Tastyworks in the text below this video. Now, I have to say, that's the least confusing, most straightforward bracketed order entry box I've ever seen in any software. It's one of the reasons I recommend it, especially to beginners. That's Tastyworks, and there's a link below. Now, once you learn what a stop loss order is, how to put it in, how to calculate it, the next logical question when you go to enter an order is, well, how do I know how far away to put a stop order to capture profits or to prevent losses or to stop losses, really? And one of the ways you've got to look at that answer changes from time to time. Here's a chart I brought up, and I calculated, and I think this is in my book too. I put it there so you could see how to measure how much the market varies every 5 minutes. I think this one goes from 9:35 in the morning till 1 in the afternoon. And except for that one long vertical red bar at 11:40, most of the time, $20 to $25 would have been a good stop in this market. Now, the market volatility varies from season to season, month to month, week to week, and day to day. So you need to take a look at how tall those candlesticks are, and that'll give you some idea of what kind of volatility you're trading in. Obviously, putting a stop too close when you can vary $20 or $30 in 5 minutes to put a stop only $5 out, you're almost sure to get stopped out. It doesn't really do much good. Well, I hope you've been able to get up to snuff today on some of the uses of the stop loss orders and the various kinds of them too. Stop loss, stock market, stop limit, bracketed orders, one cancels the other, and all those things. I appreciate you being along today. If you're a beginner, please look for links below. There's 2 playlists I've designed especially for beginners, people new to the channel. One is called Beginners, and you'll see the link in the text below. And the other one is called MACD Winners, how to get your trading signals from the MACD signal indicator. Also, hit the like button. That's the way I know, and I pay close attention to it. If you want more videos like this one, hit the like button. If you don't, then don't hit it. And I'd also like to have you take a look at my book if you haven't seen it yet. I think it makes learning a lot easier and faster to have all the material in one place. It doesn't have every bit of material that's in all the videos, but it has all the fundamentals in there, and a chapter on the psychology of trading and how the MACD and candlesticks work, the type of orders, what you need to look for when you're searching for a broker, and the things you absolutely must have. And I think it's helpful. So if you take a look at that, I would appreciate it. That's how I support the videos here on the channel. I'm Don Singletary. I hope every day is a payday for you. And thank you.